Reed Hastings seems to want to continue to say it's not really about competition from the other streaming services. It's TikTok, it's some other things, but we're not overly concerned. I don't know. Where do you come out on that, given the massive ramp up in content delivery we're seeing from, well, I could be here the rest of the segment just naming all the direct-to-consumer platforms.
Yeah, it seems obvious to me that competition is a problem, right? That everyone is raising the bar. The ease at which you could churn and come back is incredible, right? So it's a different model, David, than the ones that you and I have known. And it's very pro-consumer, and it's going to lead to higher churn and probably less sub-growth for everyone over time, right? It seems obvious to me to be skeptical of conventional wisdom here that this is just going to keep growing because they've grown in the past.
Michael, in your note out this morning, you said you've been around long enough to know that the derating of a growth stock into growth purgatory is a painful and an extended period that should be avoided. Is that where we are with Netflix?
I think we're getting there, David. I think everyone who's bullish is expecting a return to normal fourth quarter. 2022 goes back to what it used to be. But if it doesn't, then you're in that growth purgatory period, which is going to be, I mean, it's not been a great stock in the past 12 months. I think the risk is to the downside. And I really feel like I'm alone here in saying that. Maybe the stock is kind of hinting at that. But I do think that, again, past performance does not mean that they can succeed as they have. And competition's definitely getting better.
Yeah, well, Laura Martin may be with you, too. She's talking about multiple compression. Is that what you see here as you sort of get out of that purgatory? People simply not willing to pay the multiples that they did in the past?
Yeah, I've always been blown away by people's willingness to go out 5 years, put a 30 times earnings multiple 5 years from now and say that's why the stock is cheap. I mean, David, I've known you a long time, too. Sometimes it doesn't work that way, right? So let's say the multiple is actually 10 times. You have a massive derating. So Laura's right in terms of the multiple compression. It happens if you start seeing the growth start to fade. And we have a chart that shows real deceleration in the next couple of quarters down to teens growth from what was 30% growth a year ago, right? So you're seeing it happen, but there's a belief that's going to reaccelerate. And if it doesn't reaccelerate, then growth purgatory, here we come.
Michael, Netflix, of course, has enjoyed since its beginning this first mover advantage, and Parrot Analytics showing that for the first time it dipped below 50% in terms of its market share for the first time ever, of course, in the face of all of this competition. Now, Netflix saying that it's looking to get into new areas, potentially gaming, where it wouldn't be a first mover, of course. What do you think is the likelihood of success for Netflix as it seeks to kind of branch out and find new areas of growth?
I mean, they've been successful in every transformation they've made. So consistently, I'd say, why wouldn't they be successful? And they're not talking about taking on Activision or EA. They're talking about adding games to a mobile platform that's consistent with their own content. They're just trying to keep people on the platform longer. I think they said a couple of years ago they saw YouTube and Halo as the biggest competition. So I think it's in part just to keep the consumer on Netflix longer, to reduce churn, to create more value. But I see it as a modest step. It's going to take years to see if they're successful. I'm not going to discount. I mean, they've been great in whatever they've chosen. But I think to your question, it's a sign that they see growth slowing. They need to do something different to extend value for the consumer.
Shepard Smith here. Thanks for watching CNBC on YouTube.